Our Western military is about to run out of ammunition. Well, maybe not tomorrow, but some of the key critical minerals used for the production of ammo, including tungsten, which is the subject of our conversation today, are now being restricted for export by the world's largest producer, China. So what's next for the market and what's next for Western militaries? We'll find out with Ali Haji, CEO of American Tungsten. That's TUNG on the CSE exchange. Welcome to the show, Ali. Good to see you today.
Great to be here, David.
Let's flip over to my screen now and provide some more context to this story. This particular article is from mining.com, dated May. Tungsten prices hit 12-year high as China tightens export controls. This story is dated 3 months ago, so the prices have probably changed even more since then. So China dominates global tungsten production, accounting for over 80% of last year's total output of 81,000 tons. China's restriction is particularly problematic because the U.S. no longer produces commercial tungsten mining as of 2015. And there is a 2027 deadline that mandates the U.S. military to eliminate purchases of tungsten mined or processed in China or Russia, the latter being the world's third largest producer. So the stakes are particularly high for the U.S. And like I mentioned earlier in the introduction, tungsten is used for the production of penetrators or armor-piercing projectiles, now in high demand amid the ongoing war in Ukraine, says this article. So what's next? Why are we talking about tungsten, and why do we care about the production of tungsten, Ali?
Well, tungsten is a very critical element as defined by the Department of Defense. In fact, it's been on that list since 1979. The state of the planet today, with the conflicts that are raging across the world, of course, require that militaries have the necessary tungsten for their armaments, their armor, their shell casings, their missile tips, etc. So we have high demand from various military institutions, but of course we do have the fact that the developing nations are also growing their reliance on technology or growing their technological industries. They're also looking to increase their military spending. NATO spending 5% of their GDP on tungsten or on NATO spending 5% of their GDP on military, of course, is indicative of a growing demand of the minerals. So tungsten prices rising is primarily a result of that export restriction that has been put in place by China, but also as a result of increased demand due to conflict and energy, as well as electrical requirements around the world.
Give us some key industrial use cases of tungsten that are critical today.
Tungsten, of course, historically, in that image that you shared, tungsten was used in filaments for light bulbs, incandescent in nature. Of course, now we're all LED. The primary use for tungsten is in armor-piercing ammunition, in shell casings, in missile bodies, because it has a very high melting point of 2,500 degrees centigrade. And it also has the hardest property on the periodic table. So it is the hardest element on the periodic table outside of diamond. Its uses are very critical in circuitry, so microchips, as well as nuclear power plants and wind turbines that are, of course, driving the wind or the energy transition.
So now that China has more or less squeezed or controlled the export of critical minerals, including tungsten, and now that they've banned or restricted the export of these minerals, what can the West do to continue the production of ammunition, in particular, in this case, the production of armor-piercing rounds, if China continues to restrict the production and exporting of tungsten?
Well, a couple of things. North America is not new to the tungsten environment. We've been producing it since as far back as the 1900s, early 1900s, late 1800s. We have mines in North America that were in production till about 2015, and they went belly up or under care and maintenance when China started to flood the market with cheap tungsten. So what we are doing, or what we are seeing, at least in North America, is the government incentivizing organizations such as ourselves to come back online, bring production back online, and be able to set a floor for the pricing so that we are not impacted by supply chain issues in the future.
Any changes by the government in regards to permitting rights and attitude towards the production of tungsten and other similar critical minerals in North America and Europe that should come after the banning of exporting from China?
I think they've started to come into play with the Trump administration back in March of this year announcing the various executive order mandates to increase the path to production by reducing permitting, as well as ensuring that capital is deployed to these very critical projects has certainly helped. The Department of Defense issued about 15.7 million US to Mactung, which is a firewood project in the Northwest Territories. They also issued $6 million to Guardian Minerals as of a couple of weeks ago, about $6 million for that Pilot Mountain project down there. So Fast 41 is certainly assisting from a permitting perspective in the United States. The advantage that we have, which I'm sure we'll cover in the rest of the show, is we do not require state level permitting. I beg your pardon, we do not require federal level permitting. We only require state level permitting. And so Fast 41 is not something we are looking to leverage. However, we are engaged with the various government agencies to unlock that non-dilutive capital to bring us to production.
So let's just brainstorm here. Hypothetically speaking, if China were to completely restrict the exporting of tungsten, what would happen to industry tomorrow?
That's a bold question. I think, it's fairly there already. I think we are looking at ways to bring it to us without those export restrictions really playing a heavy part, but that is, of course, restrictive in the amount that we can receive. The heavy industry around us would suffer due to not having the necessary tool set to actually build. And so, building construction, et cetera, would come to a halt. You'd start to see strengthened steel alloys not being sold. So anything that would require that in its makeup not being able to come to production. With respect to the military institution or complex, if you will, in the United States, that would slowly but surely come to a grinding halt once stockpiles were depleted.
How long would it take to, let's say, have North America be completely self-reliant on the production of tungsten?
It's a tall order to answer that in its entirety. I will say that with American Tungsten, what we're doing at IMA, the intent is to bring 8% of US supply online, and that is expected in the next 12 to 18 months. So I know I can account for 12 to 18%, 12 to, I beg your pardon, 8 to 16% over the next 12 to 18 months. But beyond that, I think the number of binds that we've had under care and maintenance will require at least a number of years before they're ready to be permitted and ultimately come to production in the next sort of 5 to 7, maybe 10 years.
What's interesting about American Tungsten is that you have direct contracts or, I guess, relationships with the Department of Defense in the U.S. Can you just walk us through the nature of your relationship with the DoD?
Yeah, so we submitted a white paper to the DoD with our lobbyist group out of Washington, Jeff Green and Associates. That was submitted in January of this year. We've also added individuals to our board that have had relationships with the DOE and various conduits into Washington. We've spoken with Exim. We are in process of applying with the DOE and the DLA. The intent there, of course, is that we start to unlock some non-dilutive capital from these various government agencies as we move forward towards production.
Okay, can you elaborate further on why, in particular, the DoD is interested in working with you?
Well, the DoD requires it for defense purposes, and so they're very keen to bring tungsten production back online. Exim as well is another organization that is very keen to bring Made in America back online. So the DoD, as far as to say that we are in talks with them to receive some funding, I wouldn't say that we have a strategic or imperative advantage over any of our peers.
Are you looking to get acquired by the Pentagon, which is what they recently did with some other strategic minerals companies in the U.S.?
Certainly not. That's not, a part of the bingo card this year. But if there is a proposal that's put forward to us that makes sense to our shareholders, it is certainly one that we will consider.
Well, walk us through your projects. So I believe you have 2 main projects. Give us a rundown of each.
We've got the Star project in British Columbia, and that's very much an iron ore magnetite-rich project. It's not our focus currently. Our focus is the IMA mine in Idaho. It is a past producer of tungsten. It was the 4th largest producer of tungsten in North America until it stopped production in 1960. It is on private patented land, has the 2nd highest tungsten grade in North America. It also has 2 ounces per ton of silver, including 0.15% moly, so about $100 in credit outside of our tungsten, which is, of course, at a very high grade to begin with. Being above the water table means we don't require permitting from a water perspective or NEPA perspective. The fact that it's private and patented with very high grade, the direct shipment of ore to one of the 2 mills we're looking to contract will ensure that we have a highly profitable business with a life of mine at the very least of 7.5 years.
It's currently based in Idaho. Are you looking to expand your footprint in the U.S. or are you focusing on one deposit for now?
It is certainly our focus, but our advisory team consists of individuals that have worked on tungsten assets across North America up until 2015 when they were put under care and maintenance. So we are looking at projects outside of IMA, but IMA is the focus, and our path to production will not be impeded or otherwise disturbed as a result of an acquisition.
And from my understanding, this particular deposit has already been producing in the past, correct? It's not entirely a greenfield exploration project.
Precisely. As I said, it was the fourth largest producer up until 1960, and it ceased operations back then. It has had operations up until 2010, where Gentor drilled about 25,000 meters, thereby identifying that moly deposit of 5.7 million tons at 0.15.
So how did your company come about acquiring this project or taking over the reins, so to speak? And I believe you recently went through a rebranding. Tell us about that.
That's right. So we optioned the project from the existing owners. The owners were able to get it as a result of bailing out Gentor in 2008, 2010 of their debt. And so we've optioned the project for 5.8 million US over 8 years with the balloon payments in year 7 and 8. The payment required over the next sort of 4 years are quite minimal in nature, and we expect to be able to cover them in a couple of years of production, give or take 2 to 3 years from now. They will have an NSR. We have the ability to buy back 1% for $1 million. And that, of course, we will do once we are in production.
Let's move on to talk about capital raising and fundraising. So I believe you recently went through a private placement deal. Can you tell us more about that?
Yeah, so we announced $2.5 million on Canada Day. We had sufficient demand for about 13 million. And so we upsized to 7 as a result of allowing some institutions to come in, giving us validation and some sticky money on the cap stack. That 7 million is more than sufficient for our exploration program, our rehabilitation program, and our PEA, which we expect to have later this year or early Q1 next year.
For the new investors watching or potential investors watching, what ultimately is your objective with the company? Are you looking to expand production? Are you looking to sell the asset? Are you looking to continue exploring in the U.S. for now? Walk us through your 5-year plan here.
5-year plan involves bringing IMA online in terms of production, increasing the resource base there as well, hopefully getting a strategic to come in for a toehold of the organization, whereby they're providing us validation and any sort of equity support going forward. We will be looking at additional brownfield assets to roll into the organization as we progress. Growing the resources is our primary mandate. And in the interest of shareholders, if we were met with a proposal that, of course, makes sense, we'd be happy to consider it. But the goal for us is bring this to production and do so in the next 12 to 18 months.
How much cash are you currently sitting on? And what do you plan to do with this cash?
There's about 7 million in cash today. The intent of that cash is to spend capital on rehabilitation of the mine site. That includes road leveling, ensuring that the portals are safe for entry, mesh to hold back any scree, and developing pads for our drilling program that is upcoming. We intend to do 6,000 to 10,000 feet over the course of the summer, allowing us to put out an updated resource statement and ultimately an updated PEA that we can publish to market, showing a longer life of mine with a significant amount of supply for the United States market.
How much runway are we anticipating here?
We've got, depending on what we opt to do, whether we go out and buy a project or not, we're more than comfortable up until about March next year.
Okay. And then after that, are you looking to continue raising money through the capital markets, or do you want to issue debt? What is your plan for continuing operations?
With the various government agencies that we're currently engaged with, once we have that updated resource statement in the fall, the expectation is that the government agencies will see a longer life of mine and will ultimately move a lot quicker to help fund us to our production capacity of 500 tons per day. The capex on that is about 20 million US. Given we've asked the various agencies in a range from 11.5 all the way up to 17.5, and that's 5 agencies in total. If 1 or 2 of them were to convert, that would cover the vast majority, if not all, of our capex requirement. We've also looked at EXIM to provide us with debt from the Made in America program. That, of course, would be a small debt component that we would be willing to take on. The institutions that came in on the last placement are quite keen to do some follow-on capital. And so in terms of access to capital, I don't see us sort of sitting in the lurch, waiting for somebody to come in and help fund us to come to production, should the government not step in before them.
How would you characterize your valuation relative to your peers?
If you look at us from a sort of internal PEA estimates and the NPV that we have internally, we are significantly undervalued. Almonte, for instance, is at 0.11 PNAV. We expect to be, we're probably trading about 0.07, I will say. And so there's a bit of a gap there. And I think that starts to come to fruition when people see a larger resource that is 43111 compliant. We've already added some very strong individuals to the team. We started work on the ground as recently as 2 weeks ago. And we are a relatively new story. So we've only been around sub 2 years. And the intent is to continue to tell our story through mediums such as yourself and ensure that people understand the value proposition that we have to offer.
Well, why do you think there's currently this value gap besides perhaps lack of knowledge from the public space? Is it because you're a relatively new company, or is it because some of these projects are undergoing difficulty with extraction or permitting or zoning, or have you reached some? Yeah,
I would say it's a combination of things. One, we are a new story. Two, tungsten is not very well understood. There's not a lot of peers in the space that people are actually following. There are a couple that are dabbling in a plethora of minerals, fireweed, for instance, doing zinc and tungsten. So there are no direct comps per se. However, when you start to look at the increasing criticality of the mineral that is tungsten, as well as the government agencies backing the production of tungsten to come back online, the price of tungsten having run to where it is, and a lack of recognition with respect to our grade and our relative credits with silver and moly, these education pieces start to catch up very quickly. Based on our capital table, we only have 40 million shares out. So it is a fairly tight cap table for a near-term producer. And I think it's just a matter of time until we see that torque develop in the share price and we start to increase our valuation.
I know that tungsten is not something that the average retail investor or even institutional investor, for the most part, can just acquire. Even the futures market is relatively opaque. But generally speaking, what is the upside to buying the equity rather than just getting direct exposure to the metal itself?
I would say it has a lot to do with where the price is heading, as well as the economics. And if you start to look at the various competitors out there or various other projects around the world, as I mentioned at the onset of the conversation, we're sitting at 0.63, which is among the top 5 highest grades in the world. The grade alone, alongside the credits that I mentioned for silver and moly, will start to translate into significant margins that will end up in shareholder pockets. And that's why folks need to start paying attention that the grade profile of these tungsten projects, their path to production, which in our case includes minimal permitting, only state level permitting that is quite readily permittable based on our conversations with both the congressman and the senator's office in Boise, Idaho. The expectation that we can come online using internal PEA estimates that are vastly discounted to market, alongside that $100 credit per ton for both silver and moly, are why people should start paying attention to American Tungsten.
So what's next for the tungsten market? We talked about the geopolitical implications of China restricting the exporting of tungsten, trade war playing out, and the impact on the tungsten market. What's your outlook? Well,
the trade war has recently come about since this administration. The export restrictions have been in place before then. So they're completely independent of each other, yet nobody tends to speak of them. The tungsten market continues to grow in terms of demand. The projections are 9.8 billion from a $5.5 billion market today to 9.8 billion by 2030. And that's, a matter of 5 years away. So it's a rapid expansion in the industry. We're also seeing the fact that defense is being prioritized more highly by the governments around the world. And as a result, of course, tungsten prices continue to increase. And last but not least, I think the folks that we have in developing nations starting to grow their military arsenals as well as their technological infrastructure driving that valuation is certainly what's helping the price go up. I would expect to see some of the more traditional or historical producers in North America and otherwise start to come back online so that we have our own sort of supply chain. But also at these prices, it starts to become profitable again to start to mine in the jurisdictions that we require this most in.
Well, tell us about yourself, your professional background, and how you became part of American Tungsten and how you got involved with the company.
Of course, my background stems in asset management. I spent 14 years at Invesco in various capacities, primarily focused on M&A, and then followed by that, leading out the organization by building global centers of excellence. I left the organization in 2016. My father was in mining for the last 4 decades in Zambia, providing copper concentrate to China, of all, ironically. And in 2016, when I joined a partner of mine to bring on a gold project in Mongolia that we acquired from Centerra by the name of Step Gold, the asset is ATO. I visited Mongolia, decided that China was going far too wide and across various oceans to obtain lithium. So I started a lithium company in Mongolia, which I ultimately optioned off to an Asian entity in March of this year during the bottom of the lithium market, without any dilution to my shareholders. But the reason I joined American Tungsten is because over the last year or two, I had been spending time looking at rare earth projects in the United States, where I built relationships with various government agency representatives. And when I saw the fundamentals of the IMA asset alongside the team that was assembled at the time, I thought I could add value by bringing on my own team, raising the necessary capital, and bringing this asset to production.
Maybe introduce us to some of your other key members of management.
VP Exploration Austin Zinser, who was at Perpetua, about a $2 billion company in Idaho as well. He saw that company from greenfield exploration to construction and ultimate production. So an individual that recognizes all stages of mine development. So to jumped over from Perpetua to join us around a year ago, and we're very happy to have him. He's a director based in Boise with good relationships with the government agencies, including the state level government. The other individuals of the team of note are an advisory team, a technical advisory team consisting of 5 individuals. One person I'd like to highlight there is Finley Baker. He has been part of the tungsten market in North America till about 2015. So we've got very specific tungsten focused experts on our advisory team that have worked on the tungsten mines across North America until 2015. So we are not like other juniors where you have generalists on your technical advisory panel. And then our board and management, some individuals that I'd like to really highlight, and I'm very proud of having brought them to the team and honored that they've been able to join us. One individual is Dan Nicholas. He was the load program officer at the Department of Energy, responsible for the largest fund in their history at $40 billion to grants to public and private companies seeking government assistance. He's currently a senior advisor to EY, where he assists in that very same remit, assisting public and private companies access government funding. He was a banker at Morgan Stanley and Salomon Brothers prior to that, based between New York and Washington. So an individual that really connects the dots between the banking side of the house and ensures that we have government access in terms of funding. And then I added Jim Whitaker. Jim is the chief operating officer of Capstone Copper, a $6.5 billion copper behemoth. He was the past president of Escondida. He's held senior roles at both BHP and Barrick. And so we've got a number of mine builders that are part of the team. We've got some very seasoned tungsten experts that are part of the team. And with the likes of Jim, we now have levels of governance that I think would be enviable to most juniors.
Excellent. Well, thank you very much. Tell us where we can learn more from American Tungsten and the next milestones that we should be watching out for.
If you're interested to learn more about the story, visit AmericanTungstenCorp.com and sign up for our newsletter. When we do have material news, you will receive a notification from us. As David mentioned, we are on the CSE under ticker TUNG, T-U-N-G. We're on the OTCQB under ticker DEMRF, DEMRF again. In terms of the upcoming catalysts that you can expect from the organization, we've just started work on site to get our portals rehabbed. We are going to start our drilling program in the coming weeks. That'll be 6,000 to 10,000 feet to validate the historical resource as well as grow our resource base. That updated resource statement is expected later this fall. That will ultimately pave the path to a longer life of mine in which we would hope to accomplish one of two things. One, obtain non-dilutive capital from the government agencies that we are currently speaking with, and potentially as well look at debt facilities from Exim. You can then look to us to bring out some additional news in terms of how we will start to look at building out our mine and actually bring it to production in Q1 of next year. We also have 6,000 US shareholders, which paves the path for us to uplist on one of the two major US markets, be it the NASDAQ or the New York Stock Exchange American. So very busy 6 to 12 months ahead of us before we gear up the start of production at the IMA mine in Idaho.
Excellent. Thank you very much, Ali. So we'll put the links down below. So follow American Tungsten down there. We'll speak again soon. Welcome to the show. Thank you.
Thank you, David.
Thank you for watching. Don't forget to like and subscribe.